What is up, you guys? Nick back here again with another Nio video. I really want to focus the efforts of this video to what investors may see in the lead up to Nio's all-important third quarter's earning date scheduled for November the 17th. I'm really going to focus on the numbers here. I've seen a lot of people on the internet kind of just throwing price predictions at the computer screen without really any objective backup behind it. So I wanted to kind of zoom out the scope and really analyze what could happen to their share price and their market cap, what this would mean for Nio ADR, the American holding company, and I'm going to be talking about whether you should buy, hold, or sell Nio stock leading into their Q3. There's absolutely no time to waste today. Smash that subscribe button if you haven't already. I will be keeping a very close eye on this company in the coming days and weeks. This is really go time, and I will keep you all informed of updates on a daily basis. Hit the like button for the YouTube algorithm. It really helps spread the video, and more importantly, I'd really appreciate it. Let's get after it. Alright, so is Nio a buy at 41.63? Well, this depends on your own financial goals with investing, your time horizon, and your trust and belief in the company. I'm personally continually buying up additional shares of Nio, and I've been doing so since they were sitting around $3. It's obviously worked out fantastically well, and I'm strictly holding for the long-term future. On a macro scale, we are seeing a fundamental shift in the way consumers think about vehicles and what a vehicle can be. On a micro scale, Nio continues to dominate, outperform the rest, carving an ever-growing niche in the mainland China market, and are gearing up for a European and North American expansion. Their numbers are very impressive and may continue to reward investors. Let's dive in and take a deeper look. Nio's previous earnings call was released on August 11th. They absolutely knocked expectations out of the ballpark during this quarter. Many economists and investors had predicted that 2020 would essentially be the downfall of young premium electric vehicle companies, as any slowing in sales and growth would decimate their bottom lines. Growth companies need to do just that, grow. However, China's strict lockdown measures nipped Rona in the bud, and auto sales actually went through a boom period. Now, keeping that in mind, investors had very low expectations for Nio's numbers in the quarter, yet they absolutely destroyed it. They raised $526.4 million in revenue, that's up 138% year over year, delivered 10,331 vehicles, raised their vehicle margin to 9.7%, and their gross margin to 8.4%. These are incredible margins made possible by the relatively high sale price per vehicle. They also posted a negative 0.15 net loss per ADS when analysts had expected negative 34 EPS. So they increased revenue, their profits, their margins, decreased their net losses and operating expenses substantially, had completed multiple cash tranches from Nio ADR, injected into Nio China, buying back the company, and outperformed analysts. However, we actually saw a relatively large sell-off take place that very day. I remember being absolutely stunned at what was happening, and I couldn't believe the market was getting it so wrong. I thought the exact opposite would occur. I honestly did. I instinctively scooped up a ton more shares when I saw this discrepancy, this incongruity of a phenomenal earnings with a falling share price. What? Long term, that has worked out very nice. I think many investors may have been skeptical about Nio's long-term potential and may have been de-risking their portfolios amidst the uncertainties surrounding the global health situation. So can we expect a similar pattern to emerge leading into Q3? An important lesson to learn from Q2 is to trust the figures and your instincts. Don't always follow the market. The stock market isn't this perfect reflection of reality. So if Nio does indeed again post great numbers and a dip occurs, you bet your bottom dollar I'll be buying more. This delay in realization happens in the market sometimes, and although this was just 3 months ago, Nio was still relatively unknown to the masses back then, and with smaller growth companies, these delays are more frequent. This time around, however, a delay in realization is quite unlikely, as the cat's really out of the bag at this point in terms of Nio's success, and a lot of investors are keeping a very close eye on the 17th. Looking at the trend line heading into Nio's Q2, you can see that investors were indeed scooping up shares, and I think it's quite likely that with the two-pronged enticing news of a Democratic win, which will push electric vehicles, clean energy, and sustainability stocks higher, and high expectations for Nio's Q3 numbers, that many investors will absolutely want in and pick up more shares. It's just less risky now. but it's also for that reason, high expectations, that the actual earnings day itself may be of significance for many investors, and we could see profit taking occur on that day. We already know their quarterly delivery numbers are 13,728, as their monthly numbers have been already released, representing an increase of around 3,400 vehicles from the previous quarter. This is definitely the direction we want to see Nio trending in. However, what is important in this earnings call for me are their vehicle margins and their profit margins. I think it's fairly certain both of these will be much improved and likely nearing 15%, which would be music to investors' ears, in which case you would see a strong surge occur on the earnings day itself. Let's quickly analyze their figures to gain a better understanding of where they sit leading into their earnings date. Nio's current market cap is 57.69 billion USD, which is incredible, as June 30th they were sitting at just 8.94 billion. Their price to sales is creeping up to 34.43, and they have a current profit margin of minus 85.70%. Analysts are placing earnings estimates at negative 17 cents a share with a high estimate of negative 10 cents. I think this high estimate is far more likely, as Li Bin has come forth and stated that their margins have been a major focus as of late, and considering just last quarter they were sitting at negative 15 cents. There is no way they haven't improved this quarter over quarter. That would be very detrimental for a growth company, and it would be extremely unlikely that Nio has not improved their earnings per share. If you see long-term potential in this company and quiet down the day-to-day and week-to-week noise of growth stocks, and Nio in particular, a few cents or a dollar difference on a share price won't likely make a major impact on your long-term profits. It's for this reason that I've been dollar cost averaging and steadily buying up on dip days while still maintaining a very diversified overall portfolio. There is absolutely less risk in waiting until after the commotion of their Q3 earnings. However, you are also risking missing out on potential large gains by waiting. If they beat earnings, I would not be surprised to see the stock surge at least 10 to 15%. However, if they underperform, there could be a nasty pullback. So be aware of the risks, but then again, if you are focused on long-term investing and have a relatively long-term time horizon and believe in the potential and the power of this company, this short-term volatility just becomes noise. China continues to push electric vehicles, and their subsidy programs are set until the end of at least 2022. So even if Nio misses Q3 earnings, they have a phenomenal trajectory plotted out for the next few years. Going to their chart, it's clear it's accelerating and exponentially at that. It's exactly what you want to see for a growth company. Remember, prior to their August earnings, we also saw a run-up into earnings, albeit at a much smaller scale, but now we are essentially seeing a blow-up adult version of this run-up, and I wouldn't be surprised to see this continue until the 17th. It's for this reason that I am personally buying up additional shares on dip days prior to Q3. I invested so early in this company, and there's essentially no way I could ever lose money on my overall investment, so I'm okay with the fact that if their share price drops leading into or following their earnings, I'll just buy more shares. That is how much I trust that this company is moving in the right direction long term. I love all their moves and what they are doing. Their growth estimates are very nice, currently sitting at 92.90% for the current quarter. Remember that these numbers can remain large when a growth company is in its infancy, as it's easier to continue doubling or posting 100% increases or near it. However, as a company ages, these become less realistic. So even though these growth estimates are decreasing moving into future years, this is in by no way, shape, or form bad news for Nio. Just look at the trends. Massive firms have continued to upgrade the stock. They have gained worldwide recognition in the last few months. Heck, we even saw Elon Musk tweeting insults at them. You know you've made it when you have Muskie tossing trash at you. For those of you who missed it, he tweeted out 420 is 10 times better than 42. Kind of funny, I'm not gonna lie. I don't know, maybe he's feeling a threat coming his way. They continue to make a name for themselves in mainland China, and looking even past their Q3, their Q4 will almost certainly again outperform expectations for a number of reasons I've highlighted in some of my other videos. So if you are buying prior to the 17th, you are indeed moving higher on the risk to reward scale. However, for me personally, I am willing to take the risk with this specific company, as my average share price remains relatively low and I would not want to currently bet against this company. They continue to prove the naysayers wrong, and they are making so many right moves in the right direction. I would not be surprised to see their share price in triple digits by Q2 of 2021. I will have a video highlighting the numbers on that claim and prediction. I'm not just throwing that out of thin air. That will be coming out in a few days' time, so make sure to subscribe. You don't want to miss any of that or the updates I have coming leading into Q3 and beyond. Anyways, everyone, thanks so much for watching and the continued support. I really do appreciate it. I do this for the love of investing and spreading knowledge and, communal gains. Let's all get after it. Let's get that bread. Anyways, see you guys in the next video. Make sure to smash that like button if you haven't already. Cheers, guys. Happy trading.